Good morning and welcome to today's webinar, which goes by the name Real-Time Daily Trading Ideas. This is our internationally oriented webinar addressed to traders all over the world. We will be speaking about trading ideas, strategies, market screenings, and will be answering your questions. At this point, I would like to introduce myself to the audience. Some of you may already be familiar with my voice, some of you may not. Anyway, my name is Alex Raftopoulos and I'm very happy to be moderating this webinar. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Paul's turn. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.8 pips. Please also feel free to have a look around our website and explore our international activities, and do not hesitate to contact us should you have any questions. Well, enough of me for the moment. Now it's Paul's turn. Good morning, Paul. What's your outlook of the markets for the moment?
Good morning, Alex. Good morning, everybody. Thank you for the introduction. Ladies and gentlemen, here we go. Tuesday, 22nd of January. I hope that you can all hear my voice. I hope that you can all see my screens. We've had a very interesting January so far. There's been lots happening, lots going on, lots of opportunity. I said at the first one we did, I think it was back on the 7th, that I thought that 2019 was going to be an interesting year with lots of events to provide opportunity for us as traders, and so far January has been rather interesting. So today, well, in fact, actually for this week, we have the sort of the little soiree going on at Davos this week. So undoubtedly there will be some comments made from that will help maybe sort of move and shift markets. Okay, it's I think we had yesterday the IMF talking about how they saw increased headwinds for the global economy, and not surprisingly that sort of takes the edge off the sort of any bullishness that people are feeling. But undoubtedly, as Davos goes on, we'll sort of see a few more comments. Unfortunately, it looks like my invitation got lost in the post to join them for their little champagne soiree. But I've no doubt it'll be a wonderful week for them all, and they'll have a great old time, and they will provide commentaries which will move markets for us. Today, in terms of news, well, I suppose for our sort of European traders, well, our main things at 10 o'clock is we have the German ZEW survey, which is really just a survey about the economic sentiment within Germany and also the kind of the wider Eurozone. That should just come out about a moment or two ago, and we'll sort of have a look at that, how that impacts on the DAX. With all kind of news, if you're going to trade news, the sort of, if I had to sum it up in one word, it would be expectations. Namely, how does the market react compared to the news, and in terms of how is that news in related to the expectations. And what we'll do is we'll have a little look at the DAX here. This is a daily chart of the DAX. For those of you joining us who are very new to trading, that my charts are pretty simple. Okay, I have green and red bullish and bearish candles. I have a 20 simple moving average is the blue one, a red 50 simple moving average, and a green 200 simple moving average. I have fractals on there, and then I will draw in levels of support and resistance in any particular patterns or areas that are of interest to me. So this is the daily chart, okay, here, and we can see that having sort of hit our bottoms around about 10,400, we can see that we've had a really kind of a nice rally since then. And talked a couple of weeks ago, if I go down to the 4-hourly chart, we talked a couple of weeks ago about how we were in a sort of 10,400 to 10,800, and then we sort of kind of broke out of that, and we ranged between sort of 10,800 to 11,000. Last week we were looking to see if price would sort of sort of shorting up here and then running down there, but actually we could see that you can see that 10,400 was acting now as significant support, as a step away from the trade. And then at the end of last week we can see we had a real bullish run there. And what I'm looking at now here is that I'm looking at this as well. This is a possible flag pattern that we have built up. For those of you who don't know what a flag pattern is a continuation pattern. So not surprisingly, we expect the market to continue in the direction that it entered into the pattern. If you want to learn more about it, there are educational articles, and we've also covered it on the Mastering the 4 M's of Trading webinars, which we run every Monday afternoon. But you can also be able to find that in the Admiral Markets YouTube webinar archive. But here it is. I'm looking at, we sort of, as I said, we've seen a big run up. This is looking like a flag pattern. Where the 4-hour candle, which is just completed, it's a bullish candle. Okay, it's a bullish engulfing candle. I'd like to have seen a little bit more of a bullish close. Okay, but it's still a bullish engulfing at the end of a little flag pattern, a little channel there, bouncing off the 20-period moving average. And so, looking at it, if you were looking at this as a sort of classical technical analysis, well, you'd be looking at see where the kind of the flagpole is, and then on the classical technical analysis, you'd be looking to sort of project that forward in terms of means of a possible target. So what I'm looking at here, okay, for this trade is that put on my sort of fib levels here on the sort of engulfing candle. So what I've looking at is excuse me. I'm looking at getting long, long position at around about 11,104. That's what I'll be looking at, with my stop at just sort of 11,060. So that's going to give me about 44 ticks of trade risk. And then my target, I'm actually going to go for quite a big target here. Okay, we can see that we've got the projection there, okay, from the flagpole. You project that forward. We've also got an area of a sort of a resistance line there, up around about 11,440, 430. So actually, what I'm going to be doing is I'm actually just going to be target 11,407, which means I'm going to be risking about 44 ticks for about 303 ticks of possible profit. And that would actually give me a reward to risk ratio of about 6.9R. So you see that's a very, very large. It's a very large reward to risk ratio. If you're new to trading, that's the way I like to work. I like to look at asymmetric reward to risk ratios. That's what I'm always aiming for. But what I'll be doing is if the trade triggers and plays out, well then when we get to the sort of the recent peak there around about 11,260. Of course, I'll be taking an interest to see, hopefully, that we can see, it break through there and continue on up towards our target. So, even though there's been a little bit, let's say the news over the sort of the DAX and the German economy over the last few weeks has been less than ideal. We can see that as traders we have to trade what we see, and this is a flag pattern in what has been a 4-hour uptrend. So we're looking to see how that plays out over the next few days and weeks. So there's the DAX. It's one of the Admiral Markets' most popular trading instruments, and we'll go from there to having a look at the dollar, and we'll also have a little look at sterling as well. So we'll just go to my dollar index chart here. Here we go. Bring this up. So here we go. This is the weekly chart. If you're going to be an FX trader, you need to have an understanding of what's going on in the dollar. So I always like to have a very quick look at it every week, because it's the big daddy of the FX markets. You want to have an idea of what it's doing. And we've seen this, and you've talked about it for the last year or so, about how 95 was a significant level in terms of resistance, and then support again. We pushed up and we came back to the area here, okay. And what I'm looking at here on a weekly chart is I'm just having an idea of looking at what might be possible going forward. So when I look at this chart here at the moment, I look at this as well. We've got this has been like a left shoulder here. This has been a head here, and actually was a bit of a double top on the daily chart. I've kind of rolled back down to the 95 level, which has been significant, okay, a significant level for 18 months. And now I'm looking at on the big picture, I'm sort of starting to think, well, actually, if price starts to drift its way up to around about that kind of, let's call it sort of the in the region of around about 96.50 to 96.80, Well, then what I'm going to be looking for is I'm going to be looking to sort of see, you know, if price gets up there, what does the price action do? And if I start to see, you know, sort of bearish reversal signals there, well, then I'm actually going to be looking to see, well, are we now actually just creating a, you know, a head and shoulders pattern there on the weekly chart? I'll just draw this in very rapidly so you can see for yourself. Maybe if it helps you sort of visualize that. You know, and the thing about doing this on the sort of the weekly chart is, of course, this isn't gonna trigger overnight. This could take, you know, a good few weeks, maybe even a month, you know, a month to 2 months to basically to sort of build itself. But that allows you to actually to watch and shoot. Okay, just take it, add it to your watch list, and see if how price does react. And the good thing is that, you know, we're only doing something if price gets up to that zone and then gives us bearish reversal signals. Okay, it could do something completely different, but now I have a little bit of a plan, and I'll just be keeping an eye on that to watch how that plays out. So if we think the dollar is, you know, the short term might rise, but over the longer term may actually roll over and fall, I want to have a look at, well, you know, how are the other major currencies against the dollar stacking up. So if I have a look at, you know, another very popular trading instrument for Admiral Markets is the euro dollar. If I go up to the weekly chart, well, you know, the weekly chart there, you know, we've just looked at a sort of a head and shoulders pattern on the dollar index. So then you have to look at, well, you know, is there the chance of an inverse head and shoulders pattern here on the dollar index, on the euro dollar? And, you know, it's not as clear as the sort of dollar index, but there's definitely the opportunity for us to drift back down towards around about that 1300 level and see how price reacts once it gets there. If I'm looking at that just at the moment, you know, I see that as, you know, the euro dollar is getting squeezed. Okay, we're getting squeezed on the top side. Okay, the 20 period moving average is acting as really quite significant dynamic resistance. And then we've got that 113 big number, okay, and the weekly 200 period moving average there as well. So price is getting squeezed, okay, it's getting squeezed, and I think we might see that over the next few weeks, see a little bit of a squeeze go on there, and that will give us an indication that, you know, perhaps we'll see a move towards 1300, maybe a base there, and then, you know, if it actually turns around and starts to move north, well, that would sort of, you know, validate the head and shoulders pattern that we see on the dollar index. So once again, add to that to your watch list at the moment. Just as I said, it's looking like it's getting squeezed, and we're going to wait to see how that pops over the next few days and weeks. So I said I want to have a little look at sterling. Not unsurprisingly, you know, with all of the sort of a Brexit shenanigans, what we've seen is you know, some volatility in sterling, and you know, it's providing lots of different opportunities for trading. So for those of you who are new to trading, okay, or new to joining our sessions, what we look at is, you know, here I have a profile that's just set up for the British pound, and it allows me at a very swift sort of snapshot of sterling. So I've got pound against dollar. Here we go. Back. Euro against sterling, pound against CAD, pound against the Aussie, the FTSE, pound against New Zealand dollar, pound against Swiss, and pound against yen. And actually, what we look at is, you know, it gives me a very quick snapshot of, you know, where the strength and weakness is in terms of the sterling. And this morning, as you can probably see, this is the hourly charts I've got here. We can see that we've had sterling strength come into the market this morning. And, you know, I was hopefully just trying to set a trade on there this morning. I was interested in the pound against the yen here. In particular, what I liked was that, you know, we'd come back down to this kind of 140.70 area here, 140.70 area here. You know, and I, as always, you know, we had a nice positive bullish engulfing candle here, bullish key reversal candle here. And, you know, I was waiting for price to come back down to around about the 140.85 area to sort of give me a tighter entry with my stop beneath the recent low. But as you can see there, ladies and gentlemen, it's, you know, some days the trend is fresh and it's strong and it's not waiting for you. And this was a perfect case in point here. We can see that actually it's triggered. It's not been really any pullback at all, and it's already sort of, you know, jumped about 50 pips already in the pound against the yen already. So yeah, unfortunately that trade has has left the station without us on board. But that's trading. That's what happens to us from time to time. So let's have a little look on maybe on a bigger picture. Maybe there's an opportunity on if we go up a time frame, and in particular, here's the pound against the pound against the dollar. We've been sort of in a kind of grinding our way north here. A little bit of dollar weakness, okay, a little bit of sterling strength, more kind of relief rallies than genuine sterling strength. But I'm kind of curious here early this morning, okay, that we've had a nice bullish engulfing candle here. That you can see the 50 period moving average on the 4-hour chart has acted as pretty significant support, and pretty much like like what I like to do with the sort of pound against the yen trade is when I see a big engulfing candle there, that means that it's sort of having to take on rather a big trade size there in terms of trade risk. And what I actually like to do is I like to sort of trade around the pound, the 50% pullback of that bar. So I'll be looking there for a trade there. Okay, so on that 4-hour, so I'm looking at entry long around about the 128.87 with my stop loss at around about 128.52 underneath the recent lows. That means I've got about 35 pips of trade risk, and then actually what I'll be looking at is my target would be just underneath the kind of the 130 level. You can see it here. It's a big round significant number. We can see last time it got up there at the end of last week, it came all the way back down. So the target would be around about 129.95. So that gives you around about possible 107 pips of profit. You've got 35 pips of trade risk. So invariably there, what you're looking at is you're just looking at at around about sort of a 3 times your reward to risk, and just a little smidge under. It's still a good asymmetric reward to risk ratio. That's what I like to look for in my particular trade. So keep an eye on that. It might well be that we just get a big sterling thrust as we've seen this morning. But let's say on a 4-hour chart, it might be that we may sort of drop back a little bit. That gives us the opportunity for a little bit of a tighter entry. So just add that to your watch list, and then to finish off, what I wanted to have a quick look at, be a little bit different. Have a look at some gold and silver for you, ladies and gentlemen. Try and get across and have a little look at a fair few different things to sort of to keep us. As I said, there's always plenty for us to have a particular look at. I'll have a little look at gold to begin with. Gold, here's the weekly chart. You would have heard me sort of talking about this over the last few weeks and months. We had that kind of run up here. Once we'd broken the 1234 area, we had a run up, and we've actually just got up we're just underneath that 1300 area, which is where we had a bit of a block of trading before we collapsed sort of 6 months or so ago. So we kind of said I was curious to see how price reacted when we were up here. If I go down to the daily chart, sort of last week we were talking about how once again I was sort of seeing how price was coiling up, a little bit like what I was saying on the euro dollar, just seeing price tightening up. It's getting into a triangle, and normally a triangle is a continuation pattern. You'd expect price to continue in its intended direction. But I think, as I might have mentioned last week on one of the sessions, I was kind of curious that this could really go either way. If I just go down to the 4-hour chart on here, the reason that I was kind of looking at it is it's a case of we were in an area of supply. We were just underneath the 1300 big round number. If we'd have broken to the north side, I'd have wanted it to get above 1300 and hold, okay, before actually making a further move north. But as I said, it could also just break our way down south, and that's what we've done. We've come back to this kind of into this region of around about sort of 1280, 1275 to 1280. I see that we're a little bit of a double bottom. Then we've already had a little bit of a push north. Okay, and it wouldn't surprise me if we sort of drifted back up into the area around about 1286. Then if I get bearish price action there, just bouncing off that 50 period moving average, well then that would give me an opportunity for a short trade back down towards the 4-hour 200, which is in the region of around about 1268. So that's gold. Silver, I wanted to have a look at. This is a kind of want to add to your watch list for a longer trade, a longer play here. This is the weekly chart here. You can see that. Hopefully, you can see that we had we've had $14. $14 has acted as pretty strong support, and we had that towards the end of last year, and it gave us actually quite a nice double bottom there. And I'm just going to zoom in here. Basically, we had actually really quite a nice double bottom there. Prices rallied up there. We've had the shift in, okay, and now what I'm expecting to see, what I'd like to see, I'd like to see price drift back down towards this sort of just under 15, around about 1480 area. I'd like to see the 20 period moving average start to become dynamic support, and that might give me an opportunity to sort of take a trade to the long side. So this is what I'm adding to my sort of watch list for longer trade. I'm looking at around about being long about 1465, the stop loss at around about 1385, which gives me about 80 cents of trade risk, and then I'd be actually looking to target up towards the $17, all right, which would mean I'm risking around about 80 cents for about $2.35, which gives me about 2.9 R in terms of trade reward to risk ratio. Okay, as always, a bit of an asymmetric. Always look for an asymmetric risk to reward ratio. So there you go, ladies and gentlemen. There's another one to add to your watch list. That might take, as I said, that might take a week or two to sort of start to play with this, but that gives you the opportunity to sort of get yourself set and form your own trade plan. So there you go, Alex. If a bit of a quick fly through some interesting markets. If there's time for any questions or two, I'll happily take one if we have the time.
Paul, there's no questions for you at the moment. It seems like,
all right.
Yeah, exactly. Okay, I'll say a quick goodbye to the audience. Thank you very much for your comprehensive analysis, Paul. Thanks to the audience for listening. I hope you enjoyed today's webinar. If you did enjoy it and would like to review it, you can do so anytime. Just give us an hour or so to upload it onto YouTube. I wish everyone a good day ahead and goodbye.
Thanks very much. Trade well, everybody.
Thank you. Ta-da.